Hello and welcome to Bloomberg Quint. We are saying, thank God it's Friday, and we certainly are, and we mean it this time, because while we have seen the benchmark indices consolidate, there is plenty of movement underneath, and by that I mean stocks like Infosys, which have plunged and are increasing volatility in markets. But let's take stock of what's happened in the benchmark indices and also some counters like Infosys, and for that matter, the information technology sector. We are in conversation today with Jonathan Schiessl. He is the Chief Investment Officer at Ashburton Investments. Jonathan, thank you for joining us today. Jonathan, I'm going to begin with the obvious question for today, and that's Infosys. And I understand that it's one of the largest holdings that you have in one of your funds. What do you make of these developments? Are these developments substantially negative when it comes to the stock and the long-term potential for this when it comes to the intervention of its co-founders? And how will a foreign investor like you perceive the ongoings with Infosys right now?
Yeah, there's no doubt. Infosys needed this like a hole in the head. Obviously, it's been rumbling for some time. It's fascinating as an aside that if you look at Infosys being one of India's titan companies, but you also look at the corporate governance issues and the issues between founders and issues there with Tata, and look that seems to have gone very quiet. Where unfortunately the Infosys issues have been bubbling for obviously some time. From our perspective as holders of the stock, it's a very, very difficult decision we have to make. On the one hand, there's no doubt that with what's happened, it's going to be extremely difficult to get a high caliber candidate in place who will have the confidence that they can do the job without constant interference, I guess, or constant noise coming from potentially the founders of the company. So that's certainly a negative about who will replace the current MD and CEO. So that's obviously going to lead to a period of disruption, and that's certainly not wonderful. From at a time with everything going on in the global economy that it is, you need strong leadership. So that's certainly a negative. On the other side, you have to ask, look at the valuation the stock has come down to. This sort of 900 level on the stock has been, it's come down to this level a few times over the last 6 to 8 months, and it's found support at the sort of 900 level. It did breach that briefly today. Obviously, on the other side as well, you do have yesterday's announcement of a potential buyback, which is going to be ratified, I guess, in the next few weeks. So there's a lot of sort of negatives out there, undoubtedly, over the sort of short to medium term. But I guess in the short term, you could argue there is some valuation support down here, and particularly with the potential reasonably sized buyback coming through as well. So we, as a house, had an initial debate on it. We didn't want to necessarily sell on a day like today, but we are considering our options, shall we say.
So you are saying that you are going to consider your options, whether or not you want to reduce allocation to Infosys or not. You also want to wait for the buyback to come through. But when it comes to the rest of the information technology sector, then, considering the fact that we have seen Infosys come off substantially, would you consider maybe increasing your allocation to some other information technology stock?
Yeah, so we've actually been doing that for the last 3 to 4 months, been slowly increasing our allocation to IT. I think for us, there's various factors at play there. Yes, obviously the currency has been a headwind for some time. We don't necessarily that's going to change anytime soon. But from a sector which is relatively underloved, from a sector where in a broader market where you're struggling to find value, there certainly are pockets of value within IT. And I think if we do, as volatility rises, yes, obviously the Infosys news has come out today, and that's obviously led to volatility in the sector. But I think actually, broadly speaking, if we get an increase in global volatility, I think the IT sector you would have expected would hold up relatively well because you've got the valuation support. But also, I think, not everybody is crowded into that one area. So, we have been upping the weights slightly to our IT holdings, perhaps a bit early. It's certainly not been working so far. But we do find good value in some of the counters there.
Okay, so Jonathan, now that we've addressed, the ongoings in the information technology sector and India's information technology sector, there is also some movement and some political movement in the US, because of which we saw a little bit of a correction yesterday in the US markets. My question is that should we see some more instability come in the political scenario of US? What does it mean for American markets, and what does that mean for global markets?
Yeah, so we've been grappling with this idea for some time. Obviously, equity markets have been, risk assets, if you like, and particularly equity markets have been roaring on up ever since really Trump was elected. Clearly, it's been interesting because there are some different signals out there. Clearly, on the one hand, equity investors have bought in to the Trump idea of the reflation trade, that Trump was going to get tax reform and get the US economy going again. It was interesting because the Fed a few months back was saying they'd like to see evidence of that before they changed their policy, and we were also a bit slightly more cautious about the realistically the chances of Trump actually delivering on some of his promises. I think the reality now, one of the reasons why equity markets, for example, in the States had a nasty day yesterday, as you just pointed out, is I think perhaps some equity investors might be beginning to reappraise this idea that the Trump agenda can actually get pushed through. Clearly, with the chaos we're seeing in the White House at the moment, it's going to be very difficult for him to push through his more pro-business and obviously reflationary agenda. So I think as doubts creep in, potentially a little bit these markets could come under a little pressure, a little bit more volatility. Clearly, we've also got geopolitical issues globally as well, which is adding another level of uncertainty. But yeah, the Trump side clearly is adding caution, quite rightly so as well, to perhaps investors.
Jonathan, what's your perspective on the India story from here, and what do you think are the biggest challenges facing the Indian markets?
Yeah, well, it's interesting to see. I mean, we're still extremely optimistic, broadly speaking, on the India story. The negative, I guess, is, and one that's obviously been discussed a lot, is valuation. When I look, though, at other factors, for example, like flow, yes, we've seen a huge, obviously, pickup in domestic flows into the market, which has certainly been helped. And obviously, the other negative potentially is supply. So we're seeing obviously a massive deluge of IPOs and secondary offerings coming through, which is sucking up some of that flow into the market. From foreign investors' perspective, I think the India story still continues to stand out. I think foreigners would love to see it a little bit cheaper. But it's been interesting to note on some of the data that I see, it looks like the consensus overweight that India is amongst foreign investors has actually come down since the beginning of the year. There has certainly, been slight reductions in the Indian overweight amongst emerging market funds that we've seen. So I think, India still is a well-liked and well-loved story. I think a lot of foreign investors, though, struggle with the valuation side. And I think a lot of foreign investors also have been waiting for a sell-off before they increase allocations. So, if we do get a bit of volatility coming through and this indices can come off a little bit, then I think you would see foreign investors, begin to pump more money back into the India story. Obviously, to our thinking, the biggest issues around India and maintaining index levels and where it can go from here are probably still international as opposed to domestic. Although obviously the domestic side, it seems like the monsoon is still progressing reasonably well. But obviously there is some geopolitical issues with China at the borders that continues to rumble and does worry some people. Obviously Modi does look very strong from a political perspective within India. So broadly speaking, I think India still remains a very favoured story from a foreign investor perspective. But I don't think, quite frankly, that there's that many foreign investors who are directly invested just yet.
All right, just continuing with the macros, so far consumption had been a bright spot driving the economy, but there are some questions being raised now about economic growth not being able to create enough jobs. Is that a concern that should worry investors and also have some implications for the consumption related investments?
Yeah, I think that's a very valid question. I think we've been worrying about that for some time. Obviously, there is a huge hurdle within India to create jobs, and particularly, I guess, the issue is jobs in the organized sector. Obviously, it's a bit more difficult to track what's going on in the unorganized sector, and with obviously government policy more recently and demonetization and GST, that has created certain headwinds from an investment perspective as well. I would imagine for certain sectors. Clearly, the economy is still suffering from the after effects of the issues around the NPL problems with the banking system. That hasn't been worked through yet. And as we've been saying for some time, it's this uneven recovery just seems to continue. It isn't a broad-based recovery that we're yet seeing. So for the time being, I think I agree with you that that will be an issue, this sort of jobless recovery potentially that we're seeing. And obviously the stress in the rural sector as well is another worrisome factor, particularly for rural labor as well. So, this is not something that India can fix overnight. Clearly the Make in India push, clearly the massive increase that we've seen in foreign direct investment, FDI, ultimately will lead to new jobs, particularly in the organized sector. But this is something that's going to take, to our mind, years as opposed to months to feed through.
Jonathan, what have you been doing with your Indian portfolio holdings in the last 1 or 2 months, and which are the areas where you have been increasing exposure or reducing exposure for that matter?
Yeah, I mean, we haven't made too many changes, radical changes as such. As I said earlier, we've been tinkering around with some of our IT weights and slightly increasing that. We had, I guess, 3 or 4 months ago, been reducing some of our domestic consumption, particularly the consumer-focused sectors, where valuations were beginning to get very punchy. To our mind, they've got even punchier. We've been a little bit early, perhaps, in some of those calls. I think a lot of investors are crowded into certain of those domestic consumption stories. And, it's very difficult to justify valuations where they are currently in some of the counters, even into the medium to longer term. We as a team are quite prepared to pay reasonably high valuations for stocks in the short term, as long as we see that earnings growth coming in the medium to longer term, when you can start justifying those short-term valuations. And to our mind, even with this wonderful consumption story that India offers investors, some of the prices in some of those sectors and counters are even implying growth rates into perpetuity, which are going to be very difficult to actually deliver. That said, I think quality stocks will carry on remaining expensive. We're not saying there'll be a derating in some of those names. It's just that we think there's better value in other pockets of the market. So we've slightly refocused as well some attention away, as I said, from those consumer names, and we've pushed it back into more cyclically geared names. So we've been looking at some of the metals names. In Dalco, we've recently reintroduced into the portfolio a few months back. That's been working very well. And those sort of areas where we're quite confident on a global basis in some of these names, but as well as this recovery that we do believe in India will come through in the next 6 to 12 months. It's not going to be a profoundly strong one, but I think we will see more evidence of a recovery in India in the period ahead.
Well, let's hope we see that really recovery coming pretty soon. But on that note, thank you very much once again for joining us, Jonathan, on this show. It was a pleasure speaking to you.
Thank you.
As for you guys, thank you for watching this edition of Thank God It's Friday. The India growth story continues to remain attractive. However, consumption-related stocks continue to look overheated. That's the view coming in from Ashburton Investments. Thank you for watching, and we will see you on yet another edition of Thank God It's Friday.